Higher for longer or lower and sooner? Which way will interest rates go? Will it jack up our house prices again, or will they come crashing down if there's a regime change and we're going higher for longer for the next 30 years? Who knows? Today, I want to talk a little bit about recency bias and just how over the last 30 years, during a period here in New Zealand anyway, where interest rates just continually got cheaper and cheaper and cheaper with each cycle, well, is it reasonable to assume that that's just going to continue to get cheaper and cheaper and cheaper forever? Well, at some stage, it can't be true, right? Like you can only fold a bit of paper in half so many times. I think it's what, 6 times, 7 times, whatever it is. So if that's the case, then at some stage it has to reverse, right? So we're going to have a period of higher for longer then? Is that what this means? Well, here's what makes me nervous about higher interest rates. Apart from the fact that banks seem to fall down over in the US when interest rates stay too high for too long, and most small to medium sized enterprises probably couldn't sustain these higher mortgage payments at the moment that they're suffering on their home during a period of time where turnover is down in the business. So it's a really tough spot. Recency bias, a little bit of denial, maybe some conflicted interest where those of us in the financial industry aren't incentivized to tell you about the systemic risk that can happen every now and then. Just volatility. That's all we're allowed to talk about, it seems. But isn't that a little bit odd? Shouldn't you be prepared for something that's more of an unusual occurrence? What if war extends? What if it involves us getting involved or not? When your trading partners in the East, but your security partners in the West, how are you going to reconcile that if you're on the wrong side of that trade? If your security partner is nailed, then you're already working with the enemy in terms of trade. What's that going to look like? And how does that work with respect to interest rates when our currency now doesn't work in most parts of the world? Is our investment portfolios actually worth what we think it's worth in the future? Who knows? But as it relates to interest rates, now what worries me about a volatile period of time that we're currently in due to geopolitical risks is that it reintroduces the need for a risk premium inside of our interest rate, something which we really haven't had much of over the past 30 years. So, doesn't that mean higher interest rates for longer? Let me know what you think. I'd love to hear your comments. Cool. We'll catch you on the next one.